Trump's tariffs, tokenized gold. We're going to be looking into all of that along with what's happening in the BRICS nations today. It's going to be a good one. My name is Paul Barron. Welcome back into Tech Path. I want to thank our sponsor today, and that is Tangem. This is a great place for you guys to get into your own self-custody journey. And the cool thing here is you can put pretty much any asset you want into your Tangem wallet. Very simple to set up and very easy to use. It works with your phone. It's a little card, so you guys can use the link down below. You get a little bit of a discount. And if you hit that little Get Tangem button, that can get you to the 3-card set or the 2-card set. Go with the 3-card set. That's the extra, security that you need for sure. Today, I wanted to bring in Andy Schectman. He's been with us before. He's the president and owner of Miles Franklin. And this is a gold company, but Andy has been out there in the market. You've seen what's going on. Andy, how are you?
Paul, good to see you, brother. I'm good, thank you. Crazy times,
Excellent.
That's for sure.
No doubt. Let's lead off. I want to get into some things that Trump is claiming around BRICS. Take a look.
They said, sir, what about the BRICS states? They're going to take over the dollar, the sanctity of the dollar. They're going to create a new currency to rule the world. I said, no, they're not. They said, yes, they are, sir. They said it. I said, no, they're not. The first thing I said is any BRICS state that even mentions the destruction of the dollar will be charged a 150% tariff. Plus, we're not going to do business with them. And that includes China. And the BRICS states just broke up. I don't know what the hell happened to them. We haven't heard from the BRICS states lately.
All right, Andy, what do you think about Trump? He's posturing there again against BRICS, obviously. What's your opinion?
I think it's a foolish mistake. After 4 years of the stick, I think the carrot would have been better. After what the Bank of International Settlements did to the BRICS at the 12th hour, pulling out of Enbridge after it was fully operational. The Bank of International Settlements and their innovation hub had been behind the development of Enbridge, along with China, Hong Kong, Thailand, and United Arab Emirates for 4 years. And at the 12th hour, as the meeting in Kazan was taking place, you have Gustas Carstens, the head of the BIS, guy who's on his way out in June, said, well, we can't really be part of any program that is in association with countries that are being sanctioned by the West. It's as if he just realized that Russia was the R in BRICS. And I think you will see, to Trump's point, far less transparency in what the BRICS are doing. They just welcomed in Indonesia into the fold as a full member, the largest nickel deposit in the world. We saw just this weekend Iran, Russia, and China doing joint naval exercises, but they will not be as open as they have been in the past, I think, because they see what the West plan is. And when you talk about tariffs, 150%, those aren't tariffs. Those are sanctions masquerading as tariffs. The BRICS, for quite some time, have not really tried to create a common currency, but rather a common settlement currency, which is very different. The whole plan was to trade in local currencies and then settle in gold, but they came up with a common settlement currency called the unit. And Dilma Rousseff, the former president of Brazil, the head of the New Development Bank, BRICS New Development Bank, did say this, that in principle they've agreed to a new settlement currency called the unit, 40% gold-backed, deliverable by two central banks upon demand, 60% local currency. So I think it's the wrong move. I think it will only accelerate the BRICS, and I think it will only make them keep their cards closer to the vest. Look, no one wants to mess with Donald Trump or the West in terms of retaliatory measures like sanctions, like tariffs masquerading as sanctions and being cut off from the U.S. market. But at the same time, I think they will continue. And I think this just exemplifies why these countries have I think, found safety in numbers, if you will, because of the Western hegemony and this type of behavior where, look, we're a country that is literally insolvent. We talk about the 36 trillion in debt. Well, what about the 175 trillion in unfunded liability? We're a country that owes 28 trillion in treasuries that are coming due by 2028. We'll only take in 15 trillion in tax revenue. Where does all that come from, if not for countries continuing to want to hold our U.S. treasuries, which have been pretty poorly performing over the last year or two, especially as rates move higher? I think it's the wrong move, honestly, and I think it will have negative reverberations over the next 4 years. I guess we'll have to see, and only time will tell. But it wouldn't have been the move that I would have made. Quite to the contrary, it would have been completely opposite of that. But look, I'm happy he's here. I'm happy for many of the things he's doing, but I do take exception and disagree with that.
And you look at the value of the dollar. The Dixie's been declining considerably. Many people say that this is somewhat of an orchestrated fall. What is your thought on that? Because this would have an immediate impact on what's going on in BRICS.
Yeah, I mean, if you wanted to find a villain, so to speak, Xi Jinping and Putin and OPEC, and how could they do this? Saudi Arabia, how could they do this to us? Certainly, incentivizing this villainous act would be one way to do it. Look, I mean, I think Trump understands that a reset is in order, and you can fall on the sword, you can inflate, you can default, or you can find a villain. And, this just, in my mind, accelerates de-dollarization, but done so in a much more covert manner. And we've seen that. We've seen the acceleration of accumulation of gold and other commodities. But net since 2014, the central banks of the world have been sellers of U.S. treasuries. That hasn't stopped. And they've been replacing it with things like gold, because gold has doubled the performance of the 10-year treasury with no counterparty risk, with no sanction risk. Look at last year. Gold was up 40%. Treasuries were up 4.5%. And you have inflation, you have default risk, you have sanction risk. And why would any of these countries, why would a country like Saudi Arabia want to pull oil out of the ground with sweat and effort and labor and sell it to us for dollars when we can, with a keystroke during the pandemic, create 9 trillion of them? And why would they want to reinvest any of their excess into treasuries when we can, with a keystroke, create all of those dollars and then buy treasuries with it? It's a rigged game, and I think the rest of the world understands that. And that's why when you look at this lady here, Judy Shelton, I interviewed her recently. She was Trump's nominee for head of the Federal Reserve in 2016, although not confirmed. She has been a advisor to Trump ever since, and she is advocating for 50-year treasuries redeemable in gold. Maybe she understands that the treasury market is something that has lost, I think, appeal to much of the world. And it's no longer about trust us, this will be just fine, and more along the lines of we need to see something behind it, standing behind it, rather than just your ability with a keystroke, which many would argue is immoral. I mean, there was no effort taken to create that wealth, but to be able to touch a keyboard. I think there's a lot of countries around the world who are reevaluating the value found in U.S. treasuries. They're not what they once used to be.
Well, and you see this because it's happening in Europe. We're starting to see a lot more, I think, alternate strategies in general, if you look at what's happening both in France and Germany. And then you have Elon Musk actually calling for the United States to leave NATO, which would put some more pressure on not only American securities, but the dollar for sure. In general, especially if you start to see the EU stepping aside, which could get back into the scenario you're talking about around BRICS, where a lot of these nations are quietly building an alternate reserve, even though the lure of the American market really is the big stick here. That's the market that everybody wants to be a part of. I think that versus the dollar.
Yeah, and if he wants to reshore manufacturing, he wants to mitigate, look, just in the next 6 months, we have somewhere in the neighborhood of $7 trillion that we must come up with to pay treasuries that are redeeming or are up for redemption, maturing. And at the current rates we're at right now, roughly 4%, he doesn't want to refinance at 4%. So they want to bring down rates. And the way they do that is to bring down the dollar, bring down the stock market so that the Fed comes in and lowers rates. And to scare people into leaving equities into buying treasuries, which will lower rates, allow the refinancing of this to be much easier, a weaker dollar. These are all things that you would want. And maybe it's a form of incentivizing. And then you bring back your manufacturing. And look, it's like Shawshank Redemption. Andy Dufresne had to crawl through 2 miles of shit to get to the other side. And I think there is no other way to get to the other side than to deal with this edifice of debt that we've built based upon suppression of interest rates for 2 decades that have created huge distortions in asset prices, misallocations in resources and capital, And there is no way around it without having to pay that price, whether it be by default, hyperinflation, or finding a villain, or revaluing gold, which is what Judy Shelton, in essence, is kind of saying.
Yeah.
Of course, it's held in the gold revaluation account. I know you mentioned offline Cynthia Lummis, and that was part of her plan. Head of the Dutch National Bank, the members of the Bundesbank are all calling for gold to be revalued. After all, it's held in the gold revaluation account. That is one angle as well. And with what's happening on COMEX and the LBMA, that could be a possibility. But yes, I look at the moves that are being made, both in Europe and globally, and it is as if he is incentivizing this type of controlled demolition, a reset. And what better person to do it than the person who supposedly understands bankruptcy and reorganization better than anyone? Yeah, could it happen? Sure, I wouldn't put it past the changes. Look, I'll just say it this way, Paul. I think it would be universally agreed upon that we are at such a point when you understand 1 trillion seconds ago was 31,688 years ago, and we've been accumulating debt at the tune of $100,000 a second, or $1 trillion every 100 days, which took 200 years to do the first time. We are so far indebted, so far past that Rubicon, that it will take things that are shock and awe. It will take very drastic measures to address this, and maybe this is the first step in that journey.
Okay, so there's some stuff to unpack there, but one thing I want to go to is a clip. This is Trump talking that maybe, he's actually admitting it, I believe, that a recession is incoming. Take a look.
Let me stay on the economy for a moment, because there are rising worries about a slowdown. You've got the Atlanta Federal Reserve saying we're going to have a contraction in the first quarter. Look, I know that you inherited a mess, and you said that the other night.
I've only been here,
but are you expecting a recession this year?
I hate to predict things like that. There is a period of transition, because what we're doing is very big. We're bringing wealth back to America. That's a big thing. And there are always periods of, it takes a little time. It takes a little time.
Can you give us a sense of whether or not we're going to get clarity for the business community?
Well, I think so. But, the tariffs could go up as time goes by, and they may go up. And, I don't know if it's predictability. I think
so. That's not clarity.
No, I think that they say that. It sounds good to say. But for years, the globalists, the big globalists, have been ripping off the United States. They've been taking money away from the United States. And all we're doing is getting some of it back. And we're going to treat our country fairly.
So, I mean, he definitely did not go in there. Old Trump would have said, never, not a recession, not on my watch kind of thing. He didn't necessarily say that. So it could be one of those things where he is relinquishing that. To your point, $7 trillion in debt right now possibly could be the pressure on Trump saying, hey, we got to lower these rates, which could be implemented by what's going on with not only the stock market, the dollar, and even the crypto market to a certain extent. But I want to jump back to your potential out on this, and that is the revaluation of gold. How much of an impact would that have, Andy, if gold was revalued?
Every $4,000 increase in the price of gold would give the Treasury General account $1 trillion free and clear. And it's not so far outlandish to think that it could happen. Over my shoulder, you have Roosevelt there. His first act in office in April of '33 was to confiscate gold. Gold was $20 an ounce. That coin right there is a $20 gold coin, which was interchangeable with the $20 gold certificate back then. A dozen eggs were a nickel. He paid everyone $20.67. So they thought, geez, that's 11 dozen eggs. That's pretty good. Or 12 dozen eggs. That's pretty good. We're making a lot of money on this deal. But then he devalued the dollar immediately by 40%, revaluing gold by 40%. When Nixon closed the gold window in 1971, he then revalued at $35 an ounce, which is, by the way, what it is on every Western central bank balance sheet to this day, except in the United States, it's 42.22, because in 72, he revalued gold from 35 to 38, and then in 73 from 38 to 42.22, and the market has done the rest to revalue it to where it is now. It's held in the gold revaluation account. That's the name of it. You can't make it up on every central bank balance sheet. And as I was saying, the head of the Dutch National Bank for 2 years has been saying we need to revalue gold, at least market to market, to offset our liabilities, as have members of the Bundesbank, as has Cynthia Lummis in a effort to fund the strategic Bitcoin account. And then you got guys like James Rickards, who says, look, $24,000 an ounce gold. And he comes to that by using a 40% gold backing and M1 numbers, dividing it into the number of ounces of gold that we supposedly hold at Fort Knox and the Fed and the Denver and New York Mint. And he comes up with $24,000 an ounce, which would add $6 trillion free and clear to the Treasury General account, which would be able to start to work down our debt and inspire confidence. And to Judy's point, start backing treasuries redeemable in gold in 50-year treasuries with a very, very low, if not a zero coupon. These are the kind of moves that you would have to make in an effort to do this. Now, I'm just going to go out on a limb, and I'm not saying that this will happen at all, but you want to talk craziness, revalue gold to $142,000 an ounce, and the debt is offset immediately with your assets. Liabilities but that doesn't take into account the unfunded liabilities of Medicare,
right,
Medicaid, Social Security. But the balance sheet, could it be done? Sure. The U.S. Treasury says we'll pay $142,000 for everyone that wants to sell their gold. Every country that would like to deliver it to the U.S. Treasury. Is it pie in the sky? Sure. Could it happen? Why not? With Bitcoin at $100,000, why couldn't gold? All the central banks have been accumulating it hand over fist. And when you see what is happening right now on the LBMA, which is in essence in default, in my opinion, and the amount of gold that has been shifted, over 20 million ounces since November of last year, have come into the United States. We've become a net importer of gold. Largest deliveries we've ever seen in the history of the COMEX coming to the gold ever in the February contract, almost 6 million ounces. JP Morgan delivering 4 billion of gold into COMEX for a customer. Who's got 4 billion? Who is that customer?
Right.
Is it the Fed? Is it the Treasury? Is it Warren Buffett? Who knows? Point is that crazy things are happening that no one's ever seen in my 35-year career as it pertains to gold, the importation of it, the reshoring of it. I'll say this, I don't know what they have in store for gold, but it seems very American-centric, and it's so far of an outlier, Paul, in anything I've ever seen, I can't even begin to explain.
So there's definitely some things going on in the market, and it's so many things happening at once right now. You mentioned Bitcoin over 108,000 on its all-time high. You've got inflation now literally falling off a cliff. If you look at Truflation numbers coming in from around 3% down to where it's reporting at around 1.3 right now. Granted, Chair Powell's probably going to see some numbers coming in with CPI tomorrow. I think it's this week. And do we get a position right now where maybe the Fed does pivot quickly? And how much of an impact would that have, do you think, on traditional markets, Bitcoin and gold in general, if we do see a pivot much sooner?
One would expect it to be quite bullish, of course. Those inflation numbers are flat out lie. They are not 1.3. That's what they tell us. That's what they want us to believe. I wish it were only that way. Go to shadowstats.com. They'll say add an 8 to that, and you're closer to 9 or 10% than you are to. But in order to accomplish the agenda, if this is the agenda, you have to incentivize the lowering of rates. Well, you bring down inflation and slow down the economy. And in my mind, we're heading to stagflation, which would be, higher inflation coupled with little or no economic growth and a slowing economy and higher unemployment. And that to me is more reality. But I think indeed, if this is what they are trying to do, yes, you will see them pivot and you will see things like gold do very well. And maybe that's why we've seen a mad dash, a scramble, if you will, by not only the most well-funded traders on the planet, Paul, but the most well-informed. And we can say what we want about the vials of the central banks. They know the playbook, period. And they have been buying gold across the globe for years now and repatriating it. We've seen over 40 banks. I'll just mention, see if I can pull it up here in a second, just in a simple Google search. These are the banks that have brought their gold home over the last few years from the New York Fed and the Bank of England: Germany, Austria, Slovakia, Argentina, the Netherlands, Saudi Arabia, Hungary, Belgium, Egypt, Senegal, Romania, Nigeria, Poland, Ghana, India, Turkey, France, Serbia, Venezuela, Algeria, Cameroon, South Africa, Czechoslovakia, just to name a few. We saw the Bank of England buy massive amounts of gold over the last couple of years, bring it all home to India, including 100 metric tons they've held at the Bank of England since 1991. And we're seeing this as a continual trend. Now, the Bank of England is more or less the backbone of the LBMA. The LBMA is a T+1 settlement where you do your trade on Monday. You had T1 is the settlement day. Tuesday, you're supposed to have access to your delivery on Wednesday. They're now T+8 to 9 weeks. And that's a default, in my opinion. They say that it is a lack of manpower and trucks. No, it's not. It's much more than that. The LBMA has 36 million ounces available. Of the 279 million ounces stored on paper, only 36 million is unencumbered. This is standing against 380 million ounces in outstanding spot contracts. That's almost 11 times as much paper as there are bars. That's a big problem. And we've seen the largest monthly outflow of silver ever out of the LBMA this last month. Their float is only about 270 million ounces. They're trading 2.9 billion with the B ounces per day in paper contracts, 90% non-backed. That's 3.5 times annual global mine supply. There's a rumor out there, and I can't substantiate it, that he's pissed off at the aristocrats of Europe, and he's getting back at them. It started with moving LIBOR to SOFR, and that Powell's in cahoots with Trump on this, and that he's trying to blow up the Bank of England and the banks surrounding it. The rumor is that the U.S. banks have gone long. The European banks are wickedly short, to this degree, 90% short, and there will be a failure of delivery. And so what did the Bank of England do? Yeah, we're short on manpower and trucks. I know we've delivered a gazillion ounces to you already, but now we're short on manpower and trucks, so we're going to have to make it an 8 to 10 week delivery instead of T+1. That's a default. Battle lines are being drawn, and whatever is happening with gold is way an outlier, way off the charts, where these contracts they've been able to do for years and years and years and years in cahoots with the COMEX, where the COMEX would set the price, the LBMA would be the delivery mechanism, but really very few people stood for delivery. It was a
Right.
speculative endeavor or a hedging endeavor. And now all of a sudden you see the West, who has always been a net exporter since November, we're a net importer. And started with the Trump tariffs. That was the ruse, if you will, I think, to incentivize or to make the banks in England think no big deal that there's a whole bunch of naked contracts on COMEX. These banks need to do what's called exchange for physical, where you take a COMEX contract, which is highly fungible. You send it to London. They get the cash. London sends the metal back, and it's been going back and forth like that forever. Well, now it seems to be a one-way reshoring, onshoring trend, and I think the Bank of England's like, aha, this is deeper than we think, and has put on the brakes. So yes, I think there are a lot of things happening that could very quickly not only change the landscape economically, but for very much so for the price of gold. And I do think that it will be pegged to a system, to a new system, and it will be revalued. And it would benefit all the central banks. They're the ones who've been buying it and reshoring it themselves, really going back to 2017. So I wouldn't put that by Trump at all. I think he understands this. And then having Scott Bessent as your Treasury Secretary, who when he was running a hedge fund, gold was his largest holding, and having an advisor like Judy Shelton, who advocates for issuing treasuries collared by and redeemable in gold in 50 years. The first step would be to reshore. The second step would be to revalue, which would then reliquify the treasury, mitigate the debt, and then install confidence through stable coins, is what Judy said. Issue stable coins off of it, she says, and create a system where we now have confidence, all of it pegged to blockchain, so everyone can see not only the amount of gold, the amount of spending, the amount of stable coins, everything. Transparency in commodities, as Zoltan Pozsar says, Bretton Woods 3, the system we're in now, where Bretton Woods 1 was after World War II, Bretton Woods 2 loosely when we signed the deal with the Saudis, who they did not sign the exclusivity deal last year to re-up that 50-year deal. They said, we'll still take dollars, but not exclusively. Bretton Woods 3, a system, as Zoltan says, and one of the smartest people on the planet, which will be identified by commodities and transparency. So could this be happening? Absolutely. Do I know it to be? No, I have no idea. It could be Trump tariffs. It could be Basel III. The Basel III regulations go into effect July 1st in the United States, and that is the gold that is held in physical possession, unencumbered on the balance sheet, is tier 1. And they have massive amounts of rehypothecated, unallocated, naked positions that, okay, they're reshoring. Could it be that? Sure. Could it be the tariffs? Sure. Is it? I don't think so. I think it's much deeper than that. There is no reason that the most powerful bank in the world would have reclassified gold tier one. And to see the moves that we are making so drastically, just tell me there's something deeper in store for the price of gold.
All right, I want to go to a clip here because this is Senator Lummis who's talking about reintroducing the Bitcoin Act. And reason being, because obviously digital assets will be a part of this whole possibly new evolution of where the finance market is going. Let me play this clip for you.
I'm so pleased to announce that today I will be reintroducing the Bitcoin Act.
The Lummis plan and a modest strategic Bitcoin reserve plan neutralizes the national debt. Acquire Bitcoin consistently daily between now and the 0.99. 0.99 is January of the year 2035, and then we use surpluses from the U.S. government to continue to save in Bitcoin. It's worth $106 trillion. If you're more aggressive, the triple max plan negates the national debt. The superpower plan creates a global superpower. We can back the US dollar with Bitcoin reserves.
All right, so there you have it. Does when you look at the Bitcoin reserve, does it threaten gold in general, or is this something that you feel like, because the maxi theory is that other countries would sell their gold for Bitcoin. What are your thoughts?
I think that's preposterous, to be honest with you. You know, I mean, it's easy for Michael Saylor to say that. It certainly would benefit MicroStrategies. I think it's irresponsible and stupidity, to be honest with you. The BIS would not have reclassified gold as the only other tier one reserve asset, and the central banks would be buying Bitcoin, not gold. I think it's silly, to be honest. And I'm not raining on the Bitcoin parade. I'm just simply saying I don't think that has a snowball's chance in hell of happening, to be honest with you. I think the responsible way of looking at this is that, yes, it could be a reserve asset, and there is value for it to be as an asset, but to advocate the United States government to sell all of their gold, which they are taking the initiative of reshoring. They wouldn't reshore it to sell it. They could sell it wherever it is. Mm-hmm. That's not what's going to happen. I think alongside one another, look, assets make people wealthy, not bank accounts. And if indeed this is what he is doing, he's accumulating assets and reshoring them. Same thing with the Bitcoin. It is an asset within a strategic account, but I don't think that it will be the backbone of a new financial system. You cannot have something like Bitcoin, which can fall by 20 or 30% in a very short period of time, be standing behind a system. But it certainly can be an asset. It can certainly be something to help pay down your debt. It has a role, but I don't think it has a role as the backbone of the U.S. dollar or whatever that new U.S. dollar truly is. Is gold's time over? No, absolutely not. And nor is Bitcoin. And they should be complementary.
Andy, before I let you go, when you look at a crypto portfolio, what are you holding today?
You know, I'm a guy that since I was 19 years old, Paul, if I couldn't hold it in my hand, it was difficult for me. But because I am open-minded, because I do have relationships with Natalie and Mark and the XRP community, doing shows all the time with those guys, Black Swan and many others. I've and also Vic Swear with Theta. I have dipped my toe. I have Theta, I have XRP, and I have a little bit of Bitcoin. Just because I didn't want, after all of these years, to say, damn it, you're an idiot. Why didn't you at least dip your toe? Now, I'm a gold bug. I own a precious metals company. So I have an open mind. I have a little bit, just enough to say, yeah, I can come and talk Bitcoin with you. I own a tiny bit of it, but, you know, it helps me keep my mind open. Enough to say I have a little bit, not enough to be someone to come on your show and talk to you about the virtues of it, but enough to say, yeah, you know, this is a chance stone a little bit. I don't want to be left behind. And if things go where a lot of the people in the Bitcoin community think they'll go, like Michael, well, then a little bit will be worth a lot.
That is true. Everybody says, you know, if you hold just one Bitcoin, that's pretty much you. In the future, you're a millionaire. We'll see how it goes, because I think still it's a great digital asset when you look at the volatility of what it means. And again, its relationship to where gold might be, and stable coins, of course, we'll see in the ecosystem of crypto continue to grow. Andy, it's always great to have you on. I mean, you always kind of throw some curveballs at me, so it's been good having you today. Thanks again for stopping in. We
Well,
appreciate
I
it.
appreciate it, man. I appreciate you having me on. You know I'm not the normal guy that you have on your show, but I like your open-mindedness too. And if we all are, if we focus solely on one track, we learn more and more about less and less till we know everything about nothing. And if we don't listen to other viewpoints, we never grow. So I do appreciate it. I respect it. I always enjoy coming on and look forward to picking up where we left off, hopefully not too far down the road. But thanks,
All right,
brother.
my man. Thank you. All right, appreciate it.
See you, man.
Okay, so you guys are tuned in right now. Jump over to the Diamond Circle. It's our own private member group, and also you can get in on our Telegram group. That's where I'm actually spending a lot of my time these days because people are asking a lot of questions. So join in. It's free to get in on that, and follow me out there on X, just @Paul Barron. We'll catch you next time right here on TechPath.